Brookfield Asset Management and Brookfield Corporation are the two largest positions in my portfolio. I have made numerous videos on these businesses as well, and made it very clear that I have been buying both of them aggressively over the past couple of years. BAM is now up 83% since I started buying it aggressively in 2022, and BN is up 80% over that same time. Both of these stocks have been my largest total dollar amount gainers, by far, and I am now sitting on massive gains on both stocks. This has led to many people asking me what I am doing with my positions now. If I am looking to sell, do I think they're both still cheap, and if I am continuing to buy more? So this video is going to answer all of these questions, and update you with what my thoughts are on both of these stocks now. We are going to start by going through the key highlights from BAM's Investor Day. Then do a DCF on its potential future returns from its current price. Then we will do the exact same with Brookfield Corporation, or the BN ticker, and I will also explain the differences between these two stocks. So, with that being said, let's hop right into the video. Alright, so this is the first screenshot from Brookfield Asset Management, or the ticker symbol BAM's Investor Day. And here we can see that at the time of this presentation coming out, they had a $70 billion implied market value of the asset management business. The company was also doing $2.2 billion in fee-related earnings. BAM also reached $1 trillion in assets under management in the most recent quarter. So this is kind of the size of the business today. $70 billion market cap, which has now gone up to a roughly $84 billion market cap for the entire asset management business, and $2.2 billion in annual earnings. Then the next slide shows us that Brookfield Asset Management is constantly adapting to what the world needs and where the world is going. So previously, Brookfield Asset Management was investing in railroads and ports, hydro facilities, and pipelines. And now the business is mainly investing its new capital in telecom towers, data centers, solar, batteries, and nuclear, logistics, housing, and hospitality. And this is one of the reasons why I like this business so much, is because they are constantly adapting to what the world needs, and again, where the world is going. If they were just stuck in their ways and they wanted to continue investing in railroads, and they just let all of these new industries completely pass them by, then they wouldn't be so much as a growth business, which they pretty much are. So again, that's just kind of why I like them so much for the long term. Now, the next slide shows us that Brookfield Asset Management took 25 years to raise its first $1 trillion in assets under management. And now they are projecting to attract another $1 trillion in AUM over the next 5 years. So essentially, Brookfield Asset Management is projecting to double the business over the next 5 years. Then they say, we have set ambitious long-term targets that we plan to achieve by 2029. $2 trillion in AUM, $1 trillion in fee-bearing capital, and $5 billion in fee-related earnings. So again, they're essentially planning to double the business over the next 5 years. Now, another reason why I like Brookfield Asset Management, and one of the reasons why I think that BAM trades for a higher price ratio than BN, is because they're a very simple business and they have a very solid, clean balance sheet. So Brookfield Asset Management has $1.9 billion of cash right now, and zero debt. Now, if you compare this to BN, BN's financial statements are an absolute mess for multiple reasons that I'll actually explain near the end of this video. But BAM, the ticker BAM, is a much cleaner business. It's a lot easier to understand. It has higher margins, a much better balance sheet. And for those reasons, it is trading for a 34 price to earnings ratio today, which is double what Brookfield Corporation sells for. Now, moving on to the next slide, this shows us again what Brookfield Asset Management is projecting for the year of 2029. So they're expecting revenues of about $8.8 billion, which will convert down into fee-related earnings of about $5 billion, which is fee-related earnings per share of $3.06 for the US ticker, by the way, which is a 17% compounded annual growth rate to the earnings per share essentially over the next 5 years. So a 17% compounded annual growth rate is what the company is projecting. However, Brookfield Asset Management then says, with further upside in carried interest, we are steadily growing our carried interest base with realizations beginning to impact earnings in 2029, creating the second leg of growth. Gross carried interest to BAM is projected to be roughly $2 billion in 2029, and then by 2034, it is projected to grow to $7 billion for the year. Now, carried interest is kind of confusing, but the easiest way to understand what carried interest is it is Brookfield Asset Management's portion of the profits of the money that it invests for its clients. So Brookfield Asset Management actually gets a small portion of the gains that it produces for its clients, and carried interest is its gains. So this is real cash flow and real earnings that will come when Brookfield Asset Management eventually sells off its investments. And by 2029, they are expecting $2 billion in annual realized gains. And then by 2034, that is projected to grow to $7 billion in annual realized gains. So this is kind of like over the long term, carried interest and realized carried interest or realized investment gains are going to provide another tailwind for earnings for this business on top of their actual operating earnings growing. And then the next slide shows us what 2029 will look like with carried interest gains. So $5 billion in fee-related earnings plus $850 million of realized carried interest after taxes and everything else, which is $6 billion of distributable earnings before taxes. Then taxes will be about $900 million, so distributable earnings after taxes, or real cash flow, will be about $5.1 billion, or $3.12 of earnings per share, which is an 18% compounded annual growth rate. So this is the actual growth rate to the company's earnings that they are projecting over the next 5 years, is 18% annual growth. Now, what Brookfield Asset Management also says at the bottom of this slide is that they are projecting to pay out 95% of these earnings as a dividend to shareholders, which ultimately means that the dividend per share should grow at roughly 18% annually over the next 5 years as well. And this is the main difference between Brookfield Asset Management and Brookfield Corporation. Brookfield Asset Management pays out 95% of its earnings as a dividend to its shareholders, whereas Brookfield Corporation retains the majority of its cash flow to continue investing in further growth for the business. And for those reasons, Brookfield Asset Management looks like a more interesting holding, usually for income investors, because it's an income growing investment essentially. And Brookfield Corporation is more of a growth stock where they're more focused on increasing the intrinsic value of the business over time. So then I went over to Stock Unlock and I used the discounted cash flow calculator, and I projected out Brookfield Asset Management's potential returns from its share price today based on an 18% annual growth rate to the earnings or the free cash flow and the dividend growth rate. Then I also said that Brookfield Asset Management is going to trade for a price to earnings of about 25 over the long term, which I do think is a very fair price for this business. I think the 34 multiple that the business is selling for today is actually above fair value, and I think that a 25 multiple for this business is much more fair. So that's kind of what I think the market will value this business at in the future. That's just my speculation. Now, with these metrics right here of 18% annual earnings growth, 18% annual dividend growth, and a 25 price to earnings ratio, we get a compounded annual growth rate to the overall shareholder value of 10% annually. This means that if Brookfield Asset Management does end up hitting its projections of 18% annual growth and can actually continue to trade for at least a 25 price to earnings ratio, then it will deliver a compounded annual growth rate of 10% for its shareholders and probably outperform the S&P 500. So this is pretty much what Brookfield Asset Management shares should produce if the company does hit its projections. So now let's move into Brookfield Corporation. And this is where things do get a lot more confusing. And due to this confusion, this is also why Brookfield Corporation sells for a much lower multiple, in my opinion. So, Brookfield Corporation, the BN ticker says, the wealth solutions business has over $110 billion of insurance assets with a plan to generate $2 billion of distributable earnings in the near term. The business is well set up to triple its earnings, and this business will continue to deliver high-quality earnings and will continue growing value to BN. So for those of you who may not know, Brookfield Corporation, the BN ticker, does fully own a brand new insurance company that they set up in about 2019. And this insurance company is doing $1.4 billion of annual earnings today. And by 2026, Brookfield does project that it will do $2 billion in annual earnings. So this is a pretty serious business now. And again, BN owns the insurance company. Brookfield Asset Management does not own the insurance company. So if you want access to the insurance company and this business's growth, then you get that through BN. Then BN also says the business is now focused on tripling its earnings by 2029. So again, we can see that the insurance business is doing $1.4 billion today. By 2026, it is projected to do $2 billion. And then by 2029, it is projected to do $4.8 billion in earnings. And this is just the insurance business that Brookfield Corporation owns. Then they show that the earnings profile supports a compelling value proposition. So in 2024, with $1.4 billion in earnings, they apply a 15 price to earnings ratio on the insurance business, which gives it a $21 billion valuation. Now, per BN share, that is $13 per share of value. So Brookfield Corporation is basically saying that they believe their insurance business is worth $21 billion today, or $13 per share of BN. Now, by 2029, with $4.8 billion of projected earnings and a 12 price to earnings ratio, they say that this should be a $58 billion insurance company. That is how much the insurance business is projected to be worth by 2029, which is $36 per BN share, or about 3 times the amount that it is currently worth today. And again, if you want access to the growth of Brookfield's insurance business, then you get it through BN, not through BAM. Additionally, Brookfield Corporation owns a $25 billion real estate portfolio. That is what it is currently valued at on Brookfield's books. And again, you get access to that $25 billion real estate portfolio through BN and not through BAM. BN is the parent company of all the Brookfield companies, and they own 100% of the real estate portfolio, again, that is now worth $25 billion. Brookfield Corporation also says that they expect to generate $47 billion of free cash flow over the next 5 years. And this pie chart right here shows where they are expecting to generate all of this free cash flow. So we have the asset management business, which is Brookfield Asset Management. This is kind of where it starts to get very confusing, okay? Because the BAM ticker is 27% of the asset management business, okay? So 27% of Brookfield Asset Management is listed on the public stock market. The other 73% is owned by Brookfield Corporation, literally BN. So within the BN ticker, 73% of the remaining Brookfield Asset Management business lives within BN, privately owned. So here when you see the asset management business, this is the 73% of BAM that Brookfield Corporation owns. I know it's very confusing. It takes a long time to get your head around. I know that Brookfield is a very confusing business, but when you take a look and you start to understand all of the different aspects of this business, you start to realize that BN is quite a bit more valuable than Brookfield Asset Management actually. And the reason is because you get these other growth drivers right here. The wealth solutions business is the insurance business. And you can see right here how much free cash flow this business is projected to generate for BN over the next 5 years. And again, the Brookfield Asset Management is a different business right here that is not going to get all of the benefits from the insurance business growing. Also, the operating businesses that BN owns are going to produce cash flow right here, and then realized carried interest. BN also has a lot of its own realized carried interest because it has been investing its clients' money as well. And it has also been investing its own capital and producing gains on its own capital as well. And its realized gains from its investments should produce a significant amount of cash flow over the next 5 years. So in general, all of these different aspects of Brookfield Corporation are projected to generate $47 billion of cash flow over the next 5 years for the corporation. So then Brookfield Corporation breaks down where it is planning to allocate that $47 billion of cash. So $3 billion is going to go to paying dividends to its shareholders because Brookfield Corporation does pay a small dividend. Then they say that they want to reinvest $20 billion back into the business. And this is essentially how businesses grow. They take their profits and they reinvest it back into further growth. So $20 billion is planned to reinvest back into the business. And then there is going to be $24 billion left over. And Brookfield says, absent investment opportunities, capital will be available to return to shareholders. This will either be through larger dividend payments or through large share buybacks. I mean, Brookfield Corporation's stock is valued at $84 billion on the stock market today. So $24 billion of excess cash flow could buy back roughly a third of the business. So they could do massive stock buybacks over the next 3 years if they actually do end up generating this much free cash flow. Then Brookfield says, we are set up to deliver 17% annualized growth in DE per share from our base business over the next 5 years, increasing to 25% when you factor in carried interest and capital allocation. So the way to think about this is Brookfield's current businesses, its insurance business, Brookfield Asset Management, the portion that it owns, and its operating businesses are projected to grow at 17% annually over the next 5 years. Then when you factor in the realized gains on Brookfield's investments and its reinvestments back into future growth that are going to propel the business forward at a faster rate, then they say that this should increase the per share earnings to grow at 25% annually. And that's kind of how they break up their business and where the growth is going to come from. So on this next slide, this is Brookfield's different operating businesses. And again, we can see Brookfield Asset Management right here, and they have a number 2 note right here. And the number 2 note says, distributable earnings from BAM are represented net to BN, 73% of BAM. So here we can see that BAM should generate BN $3.7 billion of earnings by 2029 on an annual basis. The direct investments should be $600 million. So the overall asset management business should produce $4.3 billion of earnings for Brookfield Corporation by 2029, which is an 18% compounded annual growth rate. Wealth solutions are projected to grow at a 28% compounded annual growth rate, and the operating businesses are projected to grow by $200 million annually by 2029. So by 2029, Brookfield Corporation is expecting distributable earnings before realizations and capital allocation to be $10.1 billion, or $6.33 per share, which again is a 17% compounded annual growth rate. So you can basically think about this as Brookfield Corporation is projecting $10 billion in cash flow for 2029, which is free cash flow per share of $6.33. Then Brookfield says carried interest will generate $11 billion of cumulative cash flows over the plan period. So in total, realized carried interest is projected to generate $11 billion of profits for Brookfield. Now, in the year of 2029, Brookfield is projecting to generate $13.5 billion in total cash flow for the year when you factor in realized carried interest. Now, when we also factor in the reinvestments back into future growth or new businesses or expanding current businesses, then that should add another $4 billion of cumulative cash flows over the next 5 years, which will also increase the 2029 cash flow for the year to $15.6 billion, which is a 25% compounded annual growth rate. So again, this is how Brookfield is breaking up where all of their growth is going to come from and how they get that 25% compounded annual growth rate figure. So then I went back over to Stock Unlock's discounted cash flow calculator for Brookfield Corporation, the BN ticker, and entered in all of these projections. So this is free cash flow growing at 25% annually, with a 15% dividend growth rate because Brookfield Corporation does not pay out all of its cash flow as dividends, so the dividend may grow at a slower rate. So 25% annual free cash flow growth, 15% dividend growth, and a 15 price to free cash flow, okay? Now remember, Brookfield Asset Management, we put at a 25 price multiple because it's a simpler business and I do believe the market will value BAM higher. So for Brookfield Corporation, I am putting a price ratio of only 15. Now with these metrics right here, we get a compounded annual growth rate to the share price of 20.62% over the next 5 years. And this right here is why I think that Brookfield Corporation, the BN ticker, is looking like it is offering a lot more value to investors today. The Brookfield Asset Management ticker, in my opinion, is now fully priced at 34 times earnings. Even on the company's 5-year projections of 18% annual growth, it's pretty much going to produce a market return now at 10% annually. However, Brookfield Corporation on its own 5-year projections, I literally put those numbers into the DCF calculator right here, looks like it could produce a 20% compounded annual growth rate, which is significantly higher than Brookfield Asset Management. It's also worth noting again that Brookfield Corporation owns the remaining 73% of Brookfield Asset Management within the business. So by me owning Brookfield Corporation, I will still own Brookfield Asset Management. It's just that the Brookfield Asset Management shares are a pure play on the asset management business of Brookfield. Now, if that all wasn't confusing enough, I know that this is a lot to take in. I know that this is very confusing. You know, Brookfield Corporation and Brookfield Asset Management are my largest positions. So I do understand all of the numbers that we are talking about. But if you're a new investor, then, you know, this is a lot to take in, and I get it. And it does take time to understand this business. And I do think that is why it sells for a discount in the market. But I also think that's where the opportunity lies for people who take the time to understand Brookfield. So now let's knock everything up a notch and let's take a look at all of the different assets that Brookfield Corporation, again, the BN ticker, owns. So this is from the most recent financial report, the Q2 2024 report for Brookfield. And this is how their assets looked at the time Brookfield put out their second quarter results, okay? So on June 30th of 2024, Brookfield Corporation's ownership of Brookfield Asset Management was worth $45 billion. And I have the numbers here on my second screen. Right now, Brookfield Corporation's ownership of Brookfield Asset Management, based on the public valuation of BAM, is worth $64.5 billion now. So this number has grown by $20 billion, okay? Because the BAM shares have increased significantly. So this number is now $64.5 billion. Brookfield Corporation also has accumulated unrealized carried interest, which is basically just unrealized gains on investments, of $6.6 billion today. They also have direct investments on their own of $11 billion. Now, we also saw that the insurance business is currently projected or estimated to be worth $21 billion today. So that is what Brookfield has on their books right here. Now, additionally, Brookfield Corporation owns shares of BEP, BIP, and BBU. These are all publicly traded stocks, okay? And right here, Brookfield Corporation shows us that, hey, we own 302 million shares of BEP, which today are worth $8.7 billion. They also own 207 million shares of BIP, which are currently worth $7.5 billion. They also own 142 million shares of BBU, which are currently worth $3.3 billion. So as of today, recording this video on October 21st, 2024, that is how the value of these investments are currently sitting. Now, the Brookfield Property Group is Brookfield's real estate assets, which are currently valued at $25 billion. And again, Brookfield Corporation owns 100% of this real estate. So the operating businesses as of today are worth $8.7 billion plus $7.5 billion plus $3.3 billion plus $25 billion of real estate, which is $44.5 billion. So these assets right here have increased to $44.5 billion today. Now, at the bottom here, we can see that Brookfield Corporation has debt that Brookfield BN is responsible for of $19 billion. So let's add up all of the assets now, based on the values today of all of these assets. So again, BN's ownership of BAM is $64.5 billion. All of their other assets listed on the market and their real estate is worth $44.5 billion. Their insurance business is also worth $21.5 billion. They have direct investments of $11 billion, and they have unrealized gains of $6.6 billion. So all of Brookfield's assets here on their balance sheet are worth $148 billion today. Now, if we subtract out the $19 billion that Brookfield Corporation actually has in debt, then we get $129 billion of net asset value. So this is the net asset value of Brookfield Corporation today, of the BN ticker. Now, if we head over to Stock Unlock and take a look at BN's market cap today, we can see that it is trading for $85 billion. So if we go 85 billion divided by $129 billion of net asset value, then it means that Brookfield Corporation is trading for 0.66% of net asset value on their books today. This is why I think that Brookfield Corporation is also looking cheap in the market. Another way to think about this is BN's ownership of Brookfield Asset Management alone is worth $64 billion today. Then its listed affiliate shares are worth $19.5 billion. So together, that's $84 billion worth, or almost the entire market cap of Brookfield Corporation. Or in other words, Brookfield Corporation's shares of BAM, BIP, BEP, and BBU are worth $84 billion. Then the rest of Brookfield Corporation's business is selling for $1 billion. The rest of Brookfield's business is the insurance business, the property, the $25 billion of real estate, the $11 billion of investments, and the $6.6 billion of unrealized gains that they're currently sitting on. All of that is selling in the stock market for $1 billion today. That is also why I think that BN is looking significantly cheaper than Brookfield Asset Management. Now, lastly, Brookfield Corporation is generating $5.1 billion of annual cash flow today. So if we take out our calculator and we go $85 billion market cap divided by $5.1 billion of annual cash flow today, then it tells us that Brookfield Corporation is still selling for about 17 times free cash flow, essentially. Now, as we saw, or basically Brookfield Asset Management is selling for 34 times earnings today. So Brookfield Corporation is quite literally selling for half the price multiple of Brookfield Asset Management. Now, additionally, Brookfield Corporation, this business owns a lot more assets. It owns real estate, it owns the insurance company, it has its own investments, it owns shares of BIP, BEP, BBU. So there's a lot more diversity here. However, that diversity is obviously creating a lot of confusion around Brookfield Corporation, and for that reason, it's always sold, well, not always, but it has largely sold for a discount to its net asset value. And it's also sold for a discount to Brookfield Asset Management. And I think it's actually kind of logical. However, Brookfield Corporation is selling for half of the price of Brookfield Asset Management today in terms of price multiples, and Brookfield Corporation is actually projecting a lot more growth. So that combination of a significantly lower price and higher future estimated growth ultimately means that Brookfield Corporation should actually deliver higher returns than Brookfield Asset Management going forward. Also, in my opinion, I do think that Brookfield Asset Management is basically fully priced today. Because again, if the company actually does meet its 5-year projections and it does actually grow at 18% annually, then its compounded annual growth rate to shareholder value, including dividends, should be about 10% annually. So I actually do think that Brookfield Asset Management is looking expensive in the market today. Again, I think that it is fully priced. And relative to Brookfield Corporation, I think that BN is looking like it's offering a significant amount more value for investors in the market today. So I actually don't really know how I feel about this. I haven't sold any of my Brookfield Asset Management shares because I do own BAM and BN in my portfolio. Logically, if I'm just taking a look at logic and all of the numbers that I explained in this video, then there's a strong argument that I should just sell my BAM shares and put it all into BN now. Because the disconnection in value between BAM and BN is pretty dang severe today now. So I haven't made any moves in my portfolio, but this is on my mind. And that's why I wanted to make this video to kind of share my thought process with you as someone who loves these businesses. I love BAM. I love Brookfield. I think it's a phenomenal company. And I've been a huge advocate for this business on my channel for a very long time. So I think that it's time now for me to update you guys with my thoughts and try to be as objective as possible and tell you, BAM is expensive today. I'm definitely not buying more BAM today. I could see myself continuing to buy Brookfield Corporation, the BN ticker, but BAM is too expensive for me today to want to buy any more shares because I do think it is fully priced. And I need to make a decision if I want to sell my BAM shares and put all that money into BN because I do truly believe that BN will produce more returns over the long term. I also own BAM in my tax deferred accounts. My TFSA and my RRSP are full of BAM. That's where my shares are because BAM is a dividend paying company, a high dividend paying company. So I put it in my TFSA and my RRSP to avoid taxes on my dividends. But that also means that I can sell BAM for a tax-free gain and then put all that money into BN. So taxes are not really a factor in my decision making here, which I'm very blessed for because I've got a very large gain on BAM right now. If I take this gain, it will be the largest realized gain that I've had in my portfolio by multiples. So yeah, I've been sitting on this for a few days now. I'm trying to take my time and not make any quick decisions and just try to make this as rational as possible. And when I look at the numbers and when I look at the future projections, everything does say that BN should outperform BAM from this point going forward. So yeah, I haven't made a decision yet. I need to make the decision and I just want to share my thought process with all of you. And that's really why I wanted to make this video for today and just explain my thoughts on everything because everything's run a lot. So yeah, that's going to wrap up the video for today. I think that this one's going to be a longer one. It's a really in-depth though. So if you did enjoy this video, then please remember to leave a like on it. And also I have a goodie for you guys. Well, if you're a Patreon member, you've already seen this video. But for my Patreon community, I went through all of Brookfield Corporation's shareholder letters over the past decade, and I made a video summarizing all of the key data that I found. It's an over 1 hour long video, at least I think it is, but it goes through all of Brookfield Corporation's shareholder letters and explains why I think that this is such a high quality business that protects and creates shareholder value and will continue to do so over the long term. I think I made this video like 3 to 4 months ago, but I want to share it with the public YouTube channel now. And I want to show you kind of the type of content that my Patreon community gets. And I think that it's just the right time, because I released this video 4 months ago for my Patreon community. Everyone's pretty much seen it. So I don't think anyone's losing value at this point. And one, honestly, I just want to show you guys kind of the content that my Patreon community gets beyond YouTube. And two, I think that this video is absolute gold for anyone who wants to understand Brookfield more. So if you do want to check out that video, it will be in the description. And if you're someone who's interested in Brookfield, or if you are a shareholder today, I definitely would recommend checking out that video because it is a gold mine on Brookfield's business. But that's going to wrap up the video for today, everyone. So thank you so much for tuning in. If you made it to the end, you're an absolute legend. Thank you so much. And if you're new here and you want to see more stock analysis like this, then consider subscribing to my channel. But with all that being said, thank you all again so much for tuning in. As always, I truly do appreciate it, and I hope to see you all again in my next video.